Peter Eliades with you. This is Stock Market Cycles YouTube update for Wednesday, February 8th. The last time we spoke to you was on January 10th, and the headline of our YouTube update was Eliades is getting very bearish again. It's interesting because the initial headline that I wrote for that YouTube update was Eliades is very bearish again, run for the hills or something like that. But then I looked at it and I said, no, wait a minute, there's possibility for going up higher from here. So let's show them the reasons why, and we will review those again today, the reasons why we were getting very bearish again and what has happened since then, okay? I've got a line on this chart here where that YouTube update went out. And about a week later, we had started to come down. We were actually down 0.5% or 1% here. But then we had an additional tack-on rally, okay? And this rally that was added on here tended to make me more and more bearish. I'll show you the reasons why very soon. Let me first show you what I've shown my subscribers over the past couple of days. This is a beautiful parallel channel, descending parallel channel, I will emphasize. But look at this. You attach a trend line from the lows. The two anchors are the lows of June 16th of 22 right here. And the second anchor is September 30th of 22 right here, okay? Simply draw a trend line between those two closing lows. This is a closing price chart. And look what happened. We came down another time on October 11th, virtually right to the line, and another time again, October 17th, okay? So we have 4 hits of that trend line, making it a very valid trend line or slope, okay, to the downside. Then what do? Well, you go back to the high in between the lows, and that happens to have been August 16th right here, the August 16th close, and you draw a line completely parallel to this line. And there it is. And look at this. The beauty of technical analysis doesn't always work this well, but boy, did it work like a charm this time around. So the closing high on February 2nd of 41.95.44 on the S&P came up virtually exactly to that trend line. And now we've had 1, 2, 3, 4 more days with a second attempt up at that line, okay? So this is the chart I showed my subscribers a couple of days ago, all setting up for the things that I'm going to show you today, which we've seen the setup all along for the past few weeks. The setup has been there. Today, the setup was triggered, okay? For me, anyway, a sell signal that could end up being a very, very important one, but it should end up being at least an intermediate term sell signal in the stock market. So let's get into the details and I'll show you why. This is one reason right here, okay? We met the upside potential based on this technical pattern. But let me show you what I showed you in the last update, which is so critically important now because it has a history of a quarter of a century going back to 2000. Okay, let's look at that. Okay, I hope this doesn't look too messy, but the point I made in the last update was in a bear market, and that's a very important qualifier, in a bear market, VIX index readings in this zone, and the green line, the upper part of the zone is 1985, the blue line, the lower part of the zone is 1835. Those are arbitrary numbers. I use them because we had a couple of closes fairly recently at those levels. The lower level is very, very seldom seen in a bear market, okay? The upper level, when it is seen, it's a setup for an important potential sell signal, okay? So here's where I did the update last time, right here, okay? We had already been below the green line, and now we were in a position where we were set up to get an important sell signal. How does that sell signal come? Well, as a technician, If you're a technician, you'll know this. But when you get a situation like this, the first thing you look for is a move into this critical zone, okay? Should at least be below the green line, and even better, preferably, if it gets below the blue line. That very seldom happens in a bear market. Once that does happen, you simply look for a break of a downtrend line. When that break of a downtrend line comes, you've got yourself a sell signal. And I'm not going to call this the perfect indicator because there is no perfect indicator in the stock market. But I'm going to show you, I'm going to go through the history. If you've got the patience, I'm going to show them to you. What a fabulous indicator this has been in a bear market for the last quarter of a century, okay, going back to the year 2000. Let's start looking at those items now. This happened today. See the break? Let me zoom in on this for you so you can see it more clearly. Here it is right here. We've got 3 trend lines. I used different slopes for the trend lines. A black one, a red one, and a blue one. Okay. Today, here's the move today. We closed above every one of those trend lines. And that, for me, generated an important sell signal in the market. Why do I say that? Let me show you some history. Okay, this area between the vertical line coming across to the right, the vertical line is the start of the bear market, arguably, because that occurred on January 3rd. That was the closing high in the S&P 500 right here, okay? So everything that happened from that point on, we can consider to be a bear market. What I'm interested in now is times when the VIX index got below the green line and then broke above a downtrend line. We showed you the last one right here that occurred today, okay? Here's one right here that occurred. Notice what happened here. We got below the green line with the VIX index. You draw this downtrend line right here. You got above it. I'll show you exactly where. On December 5th, okay? That on the S&P was right here. Right there. Sell signal. And this is what happened after that, okay? Now, this was not a dramatic one, wasn't as nice as the other ones we're going to look at, but nonetheless, it turned out to be a pretty good sell signal, okay? Let's go back to this one. You had the downtrend in the VIX. You got below the green line, and now you're looking for a break up above the trend lines. I drew 2 trend lines here, okay, and slightly different slopes. And where did we get above them? Right here, okay? That happened right here. And this is what happened after that. Next one, downtrend, below the green line. Here we go right here. And where did we break the trend line? Right here. So that happened right here. Okay? Wasn't perfect. You rallied for 2 days after that. I wouldn't be too worried about that if you had this happening after that, though. So that's what happened here. How about what happened around the all-time high? Now, mind you, at this point, you have to still say we're in a bull market up till we get until the dashed line here, because the market has continued to go to new all-time highs, okay? But once that happens, now you're waiting for a move on the VIX index below the green line again. So you can argue 2 things. You can say, well, we looked at this one and we got a signal right here. Now, that would have been fabulous because that happened right exactly at the top. But let's be a little more pessimistic and say we didn't get one exactly at the top, but we got this next one after we got another move below the blue line here. Moves below the blue line and then a break up above the trend line are super important. They don't happen very often, and when they do, they're great signals. I didn't put this trend line in. Let's do it now while we're working together here. So we went below the blue line here. We're waiting for a break above the trend line. This time we'll use this as the trend line, okay? And we got a break above it after going below the blue line again. We got a break above it. right here. That would have been right here. And that's what happened after that. So this is the beginning of this current bear market, okay? January 3rd close of 2022. And I showed you all the results, breaking below the green line with the VIX index, breaking above the trend line. Beautiful sell signal, sell signal, sell signal, okay? Let's go back. That was for the year 2022. Let's go back and look at the last bear market. Okay, we'll work our way back. This was the last time in the bear market from '07 to '09. This was the last time that the VIX index got below these important levels, okay? Let me go out further so you can see that. Here's the important low in March of '09 right here, okay? This is what the VIX index did coming up to that. So we have 1, 2, 3, 4, arguably 5 areas to look at in that whole bear market. So let's do that now. We started to have a down move here. This is July of '08, okay? And so we're waiting for a move to get below the green line, and then we're waiting to draw a trend line in and break it for a sell signal. Here you go. Here's the break right here. Right here. Look below the arrow where we are on the S&P, right here. Okay. Fabulous signal. Never closed higher than that mark. I'm not going to tell you for how long, but it's more than 6 months, okay? It's more than a year. Look at this move. Dramatic move to the downside from that signal and never getting above the day the signal was given. Okay, next one. Go back here. We're well above the green line, start coming down to the green line, and then we finally get below it. We get into this important area right around April of '08, okay? So now we're waiting. We could have drawn a line from up here, but this is the right slant here to catch all these highs before you get into the green area and start to make a move to the upside. Where did that move happen? Where did the break above the trend line occur? Right here. Okay? On the S&P, right here. Never saw a close higher than that again. Through this 1 and 2 and all the way into the March of '09 bottom. Well, let's go back one more. You move up to the level of, this was a close on the VIX of 31. So it got above 30. Okay? And then we started coming down and you formed yourself a trend line. You got below the green line right here. And so now you're waiting for a move above the trend line on the VIX index to give you a sell signal. That occurred right here. Okay? Where was that on the S&P? Right here. Okay? Never had another close beneath there. Never had another close above where the sell signal was given. And finally, in the 2007-8 bear market, let's go back to the all-time highs at that time, occurring in this October-November time period. Here's one of those rare instances where we not only got below the green, we got below the blue also, okay? So that gives you added confidence when that happens. Now, granted, at this time, you could not have confidence that this was a bear market yet. The momentum seemed to have slowed. You came up to highs in July of '07, came back down, and then moved up to new highs. You can see here where the new highs up here, okay? But let's apply the rule anyway. Here we go. There are 2 trend lines I can draw here. One of them is this broader one coming down like that. The other one is the sharper one from this high to this high, gets broken above right here. And where was that? Virtually exactly at the closing all-time high in October of '07, okay? It was right here. October 10th, October 11th, one of those 2 days. Here's the sell signal right here. And then the broader one, it got a quick little jerk above here. So that would have been a sell signal right here. you would have had to endure a week of rallies if you'd taken that one. Although, as you can see, a break above here, you immediately broke below the trend line again, above it and below. So at that point, you might wait until you got below the green line again. That happened here, and here's where you broke above, right here. Again, a virtually perfect sell signal. No closes above that level for God knows how long. So that's 0708. This is a long exercise. If you're not interested in it, by all means, speed forward because there's some more at the end of the update. But I wanted to go through these for you one by one because as I itemize them, you'll see it's a virtually perfect sell signal in a bear market. This will do you absolutely no good in a bull market. Remember that. Okay, here's all of the 2000 to 2002 or 3. There was a double bottom in the S&P, October of '02, and let's go forward a little bit, March of '03 right here, okay? That was the end of this bear market. October '02, March of '03. Let's take a look at the history of this incredible indicator. Okay, again, at the beginning, you're never sure it's the beginning of a bear market, okay? The all-time high in the S&P occurred right here in March of 2000, okay? So then we started to get a decline. And there were two trend lines we draw here. One of them a shorter term one, the other one longer term from these two highs. But they were broken around the same time, and let's show you where it occurred. The breaking of this trend line occurred right here. Okay, where was that? Well, that was here. Virtually the exact secondary top after this primary top in March. And by the way, it got really close to that primary top. Here it is here, and the equivalent is right here. So this is where you got it almost exactly at the high. The longer term one coming down like this got broken right here. See where that was? That got broken right here. So there you go again. They were both broken basically at the same levels. Are you starting to get a feel for how this indicator works? Listen, I'm not a genius, okay? I think I'm a pretty smart guy, but I'm not a genius. I have seen no one else use an indicator, this kind of indicator. A lot of people will tell you, well, the VIX index is really low. I told you that last time. When the VIX index gets this low, you're generally at or very close to a market top. The biggest rallies I've seen in a bear market when the VIX gets in this territory is maybe 3.5%. I think in the last week or two, we had a rally actually of 4 to 5%. But that's really stretching the pendulum in one direction, okay? Let's go through these signals and continue them. They're very important. Okay, so that's the start of the bear market. Now we follow the VIX index. We're starting to get a pretty big decline. Almost got into the green level here, but didn't. Had a big rally in the VIX here as the market continued to decline. And then we got the setup again. Here's the setup. Got below the green line right here. Had a couple of trend lines you can draw from this high to this high and from this high to that high, okay? Using both of these tops coming down into this area, okay? So you say, well, how do you know to use this one? You use this one because it's the highest one just before you get into the green area, okay? So those are the obvious trend lines. And where is it given? Where is it broken to the upside? Happens right here, which is right here. I don't see a close higher than that after. Let's go forward. Get a big decline. VIX index goes way up. Starts to come down again, down again, down again. Guess what? Here we go once again. March of '02. Okay? VIX index gets below the green. We have a perfect setup here, okay? We want to draw a trend line from the high, this high, this high. Notice there are 3 or 4 highs in line right here now. So this is going to be a good trend line. It should give us a good signal, okay? That signal comes right here, and that happens to be right here. No close higher than that after that. Okay. Now there's a less sharp trend line, and that's this one right here. Because you got back into the green again after you broke above the trend line here with this signal, you got back into the green again. So we want to draw another trend line. And that goes from here through this high, and that's broken right here. Where did that happen? That happened right here. I don't see any closes higher than that. Okay? This happened after that. And that's it. This is where the bear market ended, October of 02. And you'll notice that after this period right here, there were no more forays into this territory. Now, just to show you the distinction between bull and bear markets, let's go forward and take a look. I'll move forward fairly quickly here. Now look at this. Okay? You could say here, well, wait a minute, Eliades. What kind of a crazy rule is that? Look at all this stuff here. We got into this territory right here. Yeah, this is a bull market. Okay? And this is what was happening underneath. There was no important market tops there. You could draw all the trend lines in the world you wanted here. I mean, let's just for fun draw a quick one in. Well, this goes for a long distance, but look at this trend line all the way down to here, and you get a break here. Is this going to be a sell signal? I doubt it. This is a bull market. In fact, it's a better buy signal than a sell signal. Okay. I wanted to show you the distinction and the importance of using this signal only in a bear market. Okay. So we've gone back 25 years. This is the year 2000 right here. That's where we started. We dealt with that bear market, and then this bear market, 07 to 09, and the current bear market, which started right here. Okay. So the only way you can argue and say, well, what if we've transitioned into a bull market, Peter? And I'll say to you, we have one very interesting and probably very reliable way of knowing when you see the possibility of transitioning into a bull market from a bear market. And what you almost always see is a move by the VIX index, usually gets well above the 35, 40 level, as high as 50, 60, 70, 80. When you start getting at those levels, that's when you start looking for the potential of a bear market bottom. I was going to go back and show them to you now, but that's going to take too much time. But if you have the software or the data yourselves, then take a look at it. So that's what tells me, hey, there's no way you haven't transitioned into a bear market because you haven't had VIX index readings that were consonant with bear market bottoms. Where did it occur? Here in October? What was the VIX index then? It closed at 3360. That's not where. All right, let me go back quickly just to show you. Say, well, give us an example. Here's a couple of examples, not even a bear market. This was the quick bear market of 2020 from February to March lows. But look where the VIX went. It went up to 80. So that's giving you a pretty good indication you might be seeing some kind of bottom here, okay? Let's go back to the 07, 08 bear market. Here you go here. Look what happened here. Gets up to 80 again, okay? Now, when you start coming down from there, then you have to think you've got a possibility. This is basically a fear and complacency indicator. Up here is fear. This is what leads to market bottoms. This kind of fear, okay? This is complacency down here. This is where the market says, oh, you guys don't think there's any risk in the market, huh? I'm about to show you something, okay? So that's where it got before the 09 bottom. Here's the 09 bottom right here. And look what you had gotten up to in terms of the VIX index. Okay, here's 2000 to 2002. Not as dramatic, but you certainly got up to readings. This one up here is about a 44. Before you reach the final bottom, you got a reading here a closing reading on the VIX index of 45, okay? So not as dramatic as the 80 readings that we saw, but here's the 35 level right down here that we saw. That's almost commonplace in a bear market. And it does not precede, as a rule, it does not precede or accompany important market bottoms, okay? So that's one of the important reasons I'm saying to you, we don't have the evidence here that we've seen any kind of market bottom. VIX index readings have just been too low. In fact, look at them progress throughout the year. The highest one since the bear market began was on March 4th. And then each following high in the VIX index was lower. And to me, that shows continuing, if not growing, complacency. Oh, yeah, we could get a little decline, but there's no way we're going to see a big decline in the market. That's what these readings are telling me. Complacency. And they lead to real complacency once you get into the magic zone down here. Okay. So, a long exercise. I think I showed you in detail why the signal that we just got right here today, February 8th, 2023, you can make a strong argument that's a sell signal, maybe a very important one, but at least a short-term one that leads to declines. This is the smallest decline that we saw from that signal, and that was from this one coming down from the high in the VIX in October 11th, bottom in the market, and getting below the green line in December 2nd, okay? So we got this sell signal right here when you broke above the trend line right here. It was a pretty good one. You didn't get higher. You came down and went up and matched that level again, but then came down, okay? So there you go. That's what I think is probably one of the best bear market top indicators I have ever seen. And you know what? I hesitate to say this because it gives my age away, but I've been in this business for 50 years, folks. When I talk about a quarter century, for me, it's a half century of experience, okay? Before I leave you, I want to show you once again what the advantages are to the projections that I show my subscribers, and hopefully maybe you'll want to subscribe. By the way, I would really appreciate a thumbs up for YouTube. If you have not subscribed as yet, please become a subscriber. We like to see those subscription counts go up also. So at least I'd appreciate a thumbs up if you found this interesting. And if you have not subscribed as yet, please do that. All right, I showed you this chart. This is the one we showed subscribers the other day. Good indication, especially with all of the other things we're looking at, being where the VIX index has been in that low zone, and you see this kind of pattern, that's saying, hey, you've met the upside potential right here. Now, if for some reason you start breaking above this line, this parallel channel, then you got to re-examine things and say, this is something that probably should not be happening, especially after we get that break above the VIX trend line, okay? Let me show you quickly here one last thing. In my update yesterday for my subscribers, I showed them this chart. This is what it looked like at the end of the day, not today, February 8th, but yesterday, February 7th. And I said, okay, this is an upside projection. We cannot get higher ones very short term. So this projection has been met. This is on the NDX, the NASDAQ 100. The upper end of the projection was 12,781 rounded off. The high at that point was 12,772, okay? So virtually right at the high end of the projection window. And that tells you that there's no higher projections to be given. Why? Because if we go to the next longer offset, you never got completely below it to make a move back above it and get a projection, okay? So that projection that we showed you with that offset was telling us pretty confidently that we had reached some kind of high at these levels yesterday, okay? Let me go back to the other offset. There's the NASDAQ. Let's put in the S&P cash. Same basic picture. There was a little more potential in the S&P than in the NASDAQ 100, but not much. The upper end of the projection, S&P 4185, the high 4177 round up. So you're talking about 7 or 8 points. That's 0.2%. So at the end of the day, on Tuesday, this is what it looked like. No higher projections. And Tuesday evening, by the way, and I tend to do this, I did a special update for subscribers showing them the S&P chart I showed you, this one here, and said, hey, and I had just discovered this channel. I'm always looking for trend lines and channels, okay? So that's the information that my subscribers came in to face yesterday by the close of the day. Let me show you. I know you all know, but I want to show you visually what happened right after these projections were met. Let me go back to the NDX. Okay, here's that NDX projection. This is where we did our update yesterday. Look at where this bar is, okay? I mean, to a lot of people, this looked like a breakout to the upside, ready to go and at least test these highs and perhaps break out to new highs. Let me show you what happened right after this bar. Here you go. This was the bar. This was the end of the day yesterday. And this is what happened today after meeting this projection. Okay. Okay. Long update. I wanted to show it to you because of what I believe is the great importance of the break of the VIX downtrend line today. I've shown you every time that happened previously in the past 25 years when you got below that critical area in the VIX and then broke above a trend line. I didn't see any exceptions there. Maybe you can go back and be a little more picky and tell me you found 1 or 2 exceptions in that general rule. I didn't see any, okay? 1 or 2 of them continued to rally for several days perhaps, but no more than a percent or 2 at the most after the breaking of the trend line. See, when I spoke to you last time, we had the very low VIX readings. So we had the setup. The setup is very important. What happens after the setup? Comes the signal. Today, Wednesday, February 8th, the signal was given. I rest my case, Your Honor. Thanks for watching.